Welcome to Profiletraders. This is Reza and you're listening to my market analysis for November the 17th. I will retract or shrink this chart so that we can get a broad view of what happened and what we were talking about. Last recap was after the session of Friday, and then during Friday night a very sad event took place in Paris, which was supposed to bring the market down significantly. But if you listen to what I said the last recap, I told you that I bet anything that every single central banker will step in and under no cost they will create or allow a collapse to be created by a cowardly act like the one in Paris. Sure enough, as soon as we opened to the downside, a very aggressive buyer came in, and we can see his footprint by this rejection down there. And then Monday, it was just an absolute destruction of anything and anybody that went short the market Friday. And this aggressive push to the upside kicked in during an option expiration on the top of it. Therefore, a central bank coordination for a punishment of whoever was short Thursday and Friday, banking on the event that Paris was going to create a crash, but rather we got the complete reversal that was expected. However, because we have moved now up from this low of 97 to this high of 64.75, we have moved 64 points up. Last time we came down, we were down 88 points. So 88 minus 64, we have had a deep retracement of that 88 points down. So it is very normal that now we are going to start encounter resistance. And especially all eyes will now be on the news, because as you all heard, I am not totally updated with the news, but last was a truck bomb found in Germany at a stadium. I don't know if there were actual explosives in it or not, but God forbid one of these events take place while the market is open. It could be devastating. It's one thing to have Saturday and Sunday to coordinate an orderly open. It is something else if it happens in the middle of the day while markets are open. So one has to be extremely careful with the possibility of getting affected by outside news or events in the mix of all this craziness that is going on everywhere. First support comes in at 20.3275. We could very well come down here, clean up a little bit of this underdeveloped areas, and then bounce back. We do not hold that level. We are coming to 20.25, at which point we are going to either get a very aggressive bounce back up, or if we do break that, we are literally going to drop most likely to 2009, and then come and retest the very low of the overnight of the drop after the Paris event. As for the upside, since we got a very swift rejection of today's top is a very solid top, and until we do not break it on the upside, the force should be in the favor of a drop because we have 64 point up, which we could retrace 50% of it. That would be a 30 points drop from the high where we were, and from where we are now, possibly another 10-15 points. As for crude, unfortunately, the news is not too good, because we have now about 3 billion barrels of oversupply of oil floating around, not knowing where to be delivered. We have an extraordinary strong dollar, and we are also dealing now with the fact that my supreme leader Hussein will allow Hassan in Iran to shortly release about 5 million barrels a day in the market. Excess supply with shrinkage of demand due to global contractions makes the environment very hostile to crude. So therefore now we are without no question inside a bracket. Bracket low goes in from 40 to 40.20, bracket high 42.20, 42.50. When you're in a bracket as such, best bet is to react from the extremes rather than trying to guess what should we do from the middle, because the middle is 50-50. So best bets are to wait to see price development up there to decide if it's going to break out of this rotation or if it's going to be responsive and come back down. Same thing from that bottom zone. Now let's go to the beat up one, the abused one, the molested one, the whatever you want to name it one, the one that can only go down, the one that good is bad and bad is good, the one that should go through eternal punishment day after day after day after day, and that one is gold. A long time ago, I told you that the line in the sand was 1070, and today we did break it, and then instead of bringing Armageddon on the breakdown, we are so far, and I hope you hear this word well, so far we could say that the breakdown did not succeed. If it was a successful break, we would have not gone rotational right below the break. We would have been far away from that break, closing at 10 points away from it. So this is not a good break. But so far, because tonight it can open, the Chinese come in, they freak out, they have eaten too much spicy, they're in a bad mood, they sell all their gold. You're gonna get a crash, no doubt. But if this low that we did put in of 64 holds and we do reject back into 1070, the moment that we can exit out of 1082 to the other side, this will be a possible bear trap, fake break, and then a short covering rally could follow through. This is very, very, very oversold. Very oversold. And if I can do a little bit of a measurement here to get an idea of where we stand, if I take this last leg down and transfer it to this leg, that means there is a potential and a danger that we would go hit 1050. But at 1050, I have a super high certainty and probability that price will be very, very difficult to break that level, because at that point we will have a drop of several hundred points down here. So that's the ultimate measurement if the market is going to repeat itself like before. That's the 1050 area that this down move should terminate. This was Reza with Profiletraders. Thank you for listening. If you wish to learn market profile my style, you can get all my courses and 1 year to my live trading room for $550 money back guarantee. Have a great evening.